Two clients, same income, same credit. One gets approved, one doesn't. Chase isn't making this determination strictly off of those basic data points. They're evaluating something deeper. As banks tighten, as automation increases, Chase is looking deeper than credit. They're monitoring behavior. And most people don't realize the behavior that they're signaling back to Chase. You shouldn't bank anywhere where you can't look at that relationship and find the value proposition. How is this banking relationship more profitable and valuable for me than it's costing me? That is the bottom line basis to banking anywhere. It's not about convenience. It's not about it. That's the first account my parents gave me. It's the first one out of high school. None of that matters anymore now that you're an adult, you're grown. It's time to evaluate any relationship in your life, but especially your banking relationships. How am I getting value? Is this relationship profitable for me? And is it increasing my overall net worth? Is it getting me closer to my wealth goal? We need to be breaking down how most of us that have or currently bank with Chase Bank can get the maximum return out of that relationship. And it's well beyond income, well beyond balances, and well beyond credit score. So let's dive into some of my notes. We're going to be talking about some of the myths and misconceptions. And we're going to be talking about 3 key behaviors you need to have if you want to maximize your overall relationship with Chase Bank. So the first thing we need to talk about, most people think banking with Chase is about convenience. You think branches, you think ATMs, you think, online access, which all are great. Chase is everywhere all the time between physical locations and internet access, their online platform, bar none, Chase is top notch. That's cool. But Chase is a relationship bank at scale. A lot of us are, still chomping at the bits about Navy Federal internal scores. This was the first mainstream institution that brought the concept out to the mainstream public that banks actually pay attention to relationship dynamics and not just basic transactional activity. Chase Bank is Navy Federal's internal scoring habits at scale. So they segment customers aggressively. They not only, not all Chase clients are treated equally. It's important to understand it, and a lot of you probably can relate. This is basically going to provide a validation to you that if you're having a negative or dry relationship with Chase Bank, it seems like anytime you ask them for anything, you can't get anything done. Even how the staff may treat you, to be completely honest, how the bankers are dealing with you, the branch manager, are they making an effort to get to know you and navigate that relationship? Are they reaching out to you? Or are you just another passing face in the transaction line? Very important. So 3 major ways Chase is actually evaluating you as a client. This is very important. The first is going to be cash flow behavior. So think consistency over balances. I've talked about this before. It's not just about dropping in a couple big deposits or dropping in a deposit and leaving it sitting there. That's not behavior signaling. That's, I'm just dropping money in the bank account and that's it. That's not enough comfort for the bank to turn around and give you a great credit card offer or turn around and give you a streamlined application for a mortgage or auto loan. That's not how that's going to work. Predictable inflows matter. Predictable inflows matter. It matters how consistent your income is. This is one of the reasons why almost every single starter level account Chase offers requires a direct deposit. The college account does, their secure banking does, the total checking does. They don't start getting beyond that until you have enough money in deposits, or maybe you have some kind of military affiliation and they graduate you from there. But if you're in any one of their baseline buckets of college, working class, second chance checking, you have to have a direct deposit. Why? Because predictable inflows matter greatly. Product depth. This one is slept on so bad at every bank. If you're looking to maximize your approvals and access, the savings rates you're getting paid, etc. If you want your relationship tiers to elevate at any institution, product depth is essential. What does that look like? Deposit plus credit plus digital engagement. Checking savings, maybe CDs if I have the excess funds. Credit, am I leveraging their credit cards, graduating myself up? Maybe the personal loans, auto loans, mortgages. Passive users are invisible users. I got my basic checking account. I kind of go to the ATM every now and then. I never really log in online. I have no other products and services. And then I walk in one day and decide that I actually would like a credit card. Or I want to develop my credit, rebuild my credit. I want to start tapping into a business relationship and getting immediate access to capital. It's not going to happen. If you've been passive all the way up to a certain point, and then you decide at a split second that you want significant level access to this institution, Chase for sure is going to tell you no very comfortably. They're going to tell you no right there in person, and then they're going to send you a nice little sweet adverse action letter in the mail telling you bullet point reasons why they're not about to do business with you. So it's very important that you don't just sit on the sideline and just wake up one day and decide that you want access to these resources. You have to activate that relationship. So the third is going to be risk signals. Risk signals, overdraft patterns. Hopefully you're not doing that. But if you are, trust me, it's being accounted for. Revolving versus transactional behavior. What is the difference? Revolving is going to be if you have a credit card with an institution, Chase Bank, for instance. You revolving basically means I go out and make purchases with that card, and I'm only able to pay a portion of it back down. Transactional means I go out and use that card for my everyday expenses or whatever I cover with it, and I'm able to pay it completely off. You're signaling two different behaviors, and you're painting yourself two different risk signals. Transactional means stability and control. This credit card is a value add for me. Revolving indicates I'm not in control. Things aren't predictable. This is a crutch for me. Big difference. So Chase doesn't punish low income. They punish unpredictable clients. They don't punish income. They punish unpredictability. Very important to understand that distinction. So internal scoring without having a score. I've been saying on this channel since its inception, all banks do what Navy Federal are doing, and some different scale of variation or another. They're just not as transparent as Navy Federal is about those internal metrics. So Chase has internal models that rank how valuable and predictable a relationship is. You never see the number, but you feel the outcome. You never see the number, but you will feel the outcome. So think credit card offers. Are you getting them or not? What do they look like? Line increases. I have clients literally, they're like, man, I looked and checked my statement and or checked in online, and Chase increased my limit overnight, $8,000, $10,000. Some people had their credit cards for 5, 6, 7 years and never got an increase. Pre-approvals, big difference. Pre-approvals. Am I getting solicited offers? Again, I work with various clients that bank at Chase Bank, and we talk about these different relationship factors. Oh, I already have a pre-approval for this. I have a pre-approval sitting there for that. They've been sending this mailer to me. They are offering this to me every time I log in online. So again, you don't see the number, but you feel the outcome. Credit card offers or not, line increases automatically or not, pre-approvals coming through, pricing differences. What does that mean? Am I paying fees for my account? Do they charge me for wire transfers, checks, money orders, cashier's checks? When I do borrow from them, am I getting a prime, the best rate they have to offer, or amongst the best rates, or am I getting the high risk rates if I get approved at all? All of this is being partially determined by a tremendous amount of data determining the depth, value, and predictability of your relationship. Very important. So this, again, is mirroring the Navy Federal effect at a larger scale with a lot more technology, by the way. So how do they stack up when we start talking about other banks and institutions? Chase is going to be significantly more strict than most credit unions. That's a fact, but more scalable. I've talked about this a lot as well. They are a lot more scalable. That means if you understand how they think, you can position yourself faster. Navy Federal is a phenomenal personal relationship to have, not so much on the business side. If you're a W-2 employee with reasonable credit and you're leveraging the different products, Navy Federal is a phenomenal place to bank, and you'll get access to a ton of resources. The second you decide you want to become an entrepreneur, invest in real estate, get capital for a business, as soon as you want to scale out into something at a broader scale, you're going to outgrow Navy Federal in a heartbeat. Yes, Chase Bank is a harder barrier to entry, but once you cross it, they're going to grow with you to exponential heights. Chase can follow you to 6, 7, 8 figures with no problem. You're going to outgrow Navy Federal at 6 figures. It's over. Like, you can keep it. It's still valuable, but you're going to outgrow them in a lot of different capacities. So Chase Bank isn't to be ignored because it's very important. You understand? They offer a scale and depth that mostly any credit union can't offer. So how do you use Chase Bank intentionally? This is going to be 3 practical behaviors that will ensure you success with this financial institution. So use Chase as a primary bank account. Chase Bank has the tools, resources, and access for you to use them as a primary bank account. I have too many people that have their, direct deposits over here, such and such credit union, a small local regional institution, and that bank doesn't even require a balance requirement or direct deposit to keep it free. Why are you putting the bulk of your financial efforts and your behavioral, the behavioral patterns at an institution that doesn't even require that to get a decent relationship outcome from them? Let that be your second in bank. Move over to somewhere like a Chase Bank that has scale, depth, resources, experts. Move your primary relationship there and let the rest trickle out to these other institutions that don't require as much from you. So primary operating account number one. Number two, keep behavior clean and boring. Consistent inflows, respectable outflows. Use the tools and resources they provide to pay for those outflows. So use the online bill pay, use the Zelles, use a credit card, pay it off in full every month. Predictable, have excess savings. Don't overdraw the account. Be predictable, be clean, be boring. Match product to purpose, not perks. Very important. Match product to purpose, not perks. Make sure you're aligning or work with a banker there to align what products and services you're using to a use case that makes sense and makes it sustainable for the long term. Behavior is tracked over time. So if I match my products up perfectly that I'm using based on what I need, then I'm going to have healthy behavior in them long term. When I go to Chase to grow my business and get capital, when I go to Chase to get access to funding for real estate, whatever it is I need, I've been giving them a clean picture for an extended period of time because I match the products up effectively. So this is why I break down banks one by one, because the rules aren't universal. They change. Yes, there's overlap. You're going to hear some of the same things over and over again. But I assure you, you're going to learn something new every single video about every institution that I cover. Guaranteed. So if you want to understand how banks actually work and not just Chase, you're in the right place. Make sure you subscribe. All my pioneers, welcome back. To my new viewers, welcome in. Comment down below and let me know where your current relationship stands with Chase Bank, how long you've been with them. And when you think about the value proposition component that I talked about earlier in the video, has the relationship with Chase Bank been more profitable for you, or has it been costly for you? What have you gotten out of that relationship? Comment down below and let me know where you stand, what you've gotten approved, or how they help you scale your wealth and your resources. Comment down below so we can start changing the way we think about this. Like, comment, share, subscribe, support the channel so the channel can continue to support you. Get in the description section down below so you can tie in with me on Instagram and TikTok. For those of you who are new and stuck it out this far, I am a career banker by trade, financial services professional. I've been in the field over 14 years. I manage a deposit relationship book of $25 million, well past that in investment relationships, as well as the lending relationships as well. I have a state mortgage loan originator's license. I have a FINRA investment license, life insurance license, and a small business banker by trade. So you're getting content and information on this channel from somebody who's taking these same data points, strategies, and insights and applying it to real life people and businesses every single day. So you're not getting it from some random dude on YouTube who took somebody else's course and now coming out regurgitating it to you. Just thought you should know. Other than that, I want each and every one of you to stay focused, stay in motion. I'll see y'all soon.